Ready to pass the CPA exam faster? Visit cpapass.ai. Today, the 3 fund categories: master the core fund accounting structure. When you study for the CPA exam, the first thing to realize is that governments do not exist to make a profit. Unlike Apple or Walmart, which follow FASB rules to measure net income, state and local governments follow GASB standards to demonstrate accountability to taxpayers. To do this, they do not use one big set of books. Instead, they split their resources into separate self-balancing buckets called funds. Think of this like a household using separate checking accounts, one for groceries, one for home renovations, and another for a side business. This prevents commingling and ensures restricted money is spent exactly as intended. And what exactly is a fund? By definition, a fund is a self-balancing set of accounts. This means each individual fund operates like its own mini entity with its own balance sheet and operating statement. Every fund tracks its own assets, liabilities, revenues, and expenditures or expenses. For governmental funds, we use a unique accounting equation: assets plus deferred outflows equals liabilities plus deferred inflows plus fund balance. This structure is designed to isolate restricted resources so they cannot be accidentally spent on unauthorized projects. On the exam, remember that a fund is not just an account. It is a complete independent accounting entity that must always balance on its own. To master government accounting, you must memorize how GASB categorizes all funds into 3 primary buckets. First, we have governmental funds, which cover core public services like police and roads. We use the mnemonic GRACE PP to remember them, and they use modified accrual accounting. Second, we have proprietary funds for business-like activities, like a city-owned water utility. Remember them with the mnemonic SE, and they use full accrual accounting. Finally, fiduciary funds hold money in trust for others, such as employee pensions. We use the mnemonic SIPOE for these, and they also use full accrual accounting. Memorizing these 3 categories and their respective accounting bases is your absolute best defense against classification traps on exam day. Yeah, let's dive deeper into governmental funds. These 5 funds, general special revenue, debt service, capital projects, and permanent, focus strictly on current financial resources. This means they only track what is spendable right now. Because of this, they use modified accrual accounting, where revenue is recognized only when it is both measurable and available, meaning collected within 60 days of year end. Here's a major examiner trap. Because these funds focus only on short-term cash and near-cash items, long-term capital assets like a fire station building and long-term liabilities like outstanding bonds are never recorded here. They only appear at the government-wide level. If you see a question asking about a governmental fund balance sheet, immediately eliminate any option containing buildings or long-term debt. Now let's look at proprietary and fiduciary funds, which both use full accrual accounting. Proprietary funds include enterprise funds, which serve the general public, and internal service funds, which serve other government departments. Fiduciary funds hold assets in a trustee or custodial capacity for outside parties, such as employee pensions or tax collections for another county. Because these fiduciary resources do not belong to the government and cannot support its programs, they are completely excluded from the government-wide financial statements. This is a favorite trick of examiners. To practice applying these distinctions and master your fund accounting classifications, head over to cpapass.ai to work through our targeted multiple choice questions and task-based simulations.